Welcome back to the Paisa Forever channel. Imagine a world where your investment portfolio never sleeps, never gets tired, and most importantly, never panics. Imagine your wealth managed with such mathematical precision that even a total market meltdown doesn't cause a single moment of hesitation. It sounds like the ultimate financial dream, doesn't it? But here's the catch. What if that precision cost you the very human connection that keeps you grounded? This is the AI investing paradox. Today, we dive into how this revolution is specifically reshaping the landscape for the modern Indian investor. Let's break this down by starting with our first point, the rise of the Bionic Indian advisor. The future of wealth management isn't about machines simply replacing people. It's about the Bionic model. This is a hybrid approach where AI handles the heavy lifting, massive data processing and automation, while the human advisor provides the empathy and ethics that code cannot replicate. Why does this matter so much in India? Because Indian investors deeply value intimacy and personal trust. You want an advisor who understands your family's legacy. While AI is highly credible, it lacks the lived experience needed for intimacy, which remains a human-led premium service. Now here's the interesting part about the global scale of this shift. Point 2 focuses on India's role in the $200 trillion global wealth boom. Research shows that global assets under management are projected to hit $200 trillion by 2030. While North America leads, the Asia-Pacific region with India at the center is the fastest growing market with a compound annual growth rate of 6.8%. For you in India, this rapid wealth creation is driving a structural shift towards technology-enabled advisory. Your portfolio isn't just a local concern anymore, it's a vital part of a massive global engine. But wait, there is even more than just big numbers. Point 3 is about AI-powered financial inclusion for the underbanked. For decades, lacking a traditional credit history made you invisible. Now, AI uses digital footprints, your digital shopping, and even the type of smartphone you use to assess creditworthiness. Believe it or not, using an iPhone versus an Android can be a predictive data point. This is a game changer for India's small business owners and MSMEs who lack formal credit scores but have active digital lives. AI bridges that gap, allowing a merchant in a Tier 2 city to finally access essential growth capital. As this technology explodes, we encounter point 4, the end of the black box defense. For years, institutions could hide behind complex code, saying the computer said no without explaining why. This is the black box problem, where even developers don't fully understand the outcome. But regulators are stepping in. There is a growing demand that AI-driven decisions be explainable in plain language. As Indian fintech usage reaches record highs, you have an increasing legal right to know exactly why a loan was denied or an investment chosen. Transparency is no longer a luxury, it is a core legal requirement to protect you. This brings us to point 5, the EPOCH Framework. While AI is great at spreadsheets, humans retain a permanent edge in 5 key areas: empathy, presence, opinion, creativity, and hope. Think about it. During intense market volatility in Mumbai, do you want a spreadsheet telling you the crash probability, or do you want human hope and leadership? AI is fundamentally backward-looking, identifying patterns in the past. But human judgment is essential for navigating those black swan events where the past is no longer a reliable guide. An advisor's ability to offer a principled opinion and emotional vision during a crisis is what makes them irreplaceable. Here's what this means for your portfolio access. Point 6 is the democratization of billionaire strategies. In the past, tools like tax loss harvesting and direct indexing were reserved for the ultra-wealthy. Tax loss harvesting involves selling assets at a loss to offset capital gains, potentially saving thousands. Direct indexing gives you control over individual stocks. Thanks to AI, these complex strategies are now accessible to retail investors through a smartphone app. For cost-sensitive Indian investors, it means you can use the same wealth preservation tools as the world's richest people, all with a few taps. It's truly leveling the playing field. However, we must talk about the new fraud frontier. Point 7. AI deepfakes and phishing. Malicious actors are weaponizing generative AI to create incredibly convincing deepfakes of voices and videos. Cybersecurity is now the top systemic risk heading into 2026. This matters immensely to the Indian audience because of our high volume of digital payments and UPI transactions. Protecting against AI-driven fraud is the most searched safety concern for local investors today. Staying safe means combining tech-driven security with that healthy human skepticism we've always relied on. Never trust an urgent digital request for money without verifying it through a second human channel. Then there is the fee compression war. Point 8 is the battle of 0.25% versus 1%. Robo-advisors typically charge a median fee of around 0.25%, significantly lower than the 1% fee often charged by traditional human advisors. For India's cost-sensitive market, this raise to zero is forcing a massive re-evaluation of value. If you're paying 1%, you should be getting high-touch human connection and complex planning that a machine cannot offer. The data shows that while fees are falling, the value of human connection is being re-evaluated as a premium service. Let's look at the psychology of point 9, 24/7 discipline versus human emotional mistakes. One of the biggest reasons investors fail is bad behavior. Humans are prone to action bias, the urge to do something when the market gets volatile. AI never panics and follows data-driven rules consistently. Since most Indian investors only check in with advisors twice a year, AI provides the real-time monitoring and behavioral nudges needed to stay the course. It acts as a digital anchor, keeping you disciplined when your emotions are telling you to run. It effectively bridges the gap between your long-term goals and your short-term fears. Finally, point 10, the socio-economic risk of algorithmic bias. AI models can unintentionally perpetuate systemic discrimination if trained on historical bias data. In a diverse landscape like India, this is a serious concern. We could see networked discrimination where an algorithm uses factors like your location or education as a proxy for creditworthiness, unfairly blocking people from opportunities. We must ensure these algorithms are audited for fairness so they don't reinforce old inequalities under a new high-tech label. Data-driven doesn't always mean fair, and we need human oversight to ensure that the digital future of finance is inclusive for every person. What are the takeaways? Look for an AI Bionic advisor, leverage Billionaire tools, stay vigilant against scams, and always demand explainability. The future of investing isn't a battle, often I. Are you ready to go Bionic? If you found this helpful, hit that like button. Subscribe for more. Let me know, would you trust an AI? Thanks for watching us today.
Disclaimer: this video is for informational purposes only and does not constitute financial advice. The market involves risk, so please conduct your own research before investing.